Hey guys, welcome back to the channel. Today we're discussing Li Auto stock, and now I want to talk about the forecast and price targets for the next 12 months. Now we see right here that Li Auto actually has a $60 high price target and an average of $43.64. Now this is where most analysts agree on. It's mostly there's more buy ratings and hold ratings, and there's zero sell ratings. So no one's calling for this stock to be a sell or anything like that. It's just, even though Li Auto didn't actually deliver that many cars compared to December, their numbers actually fell in January. When you compare that to like the other EV makers like XPEV and NIO, they did it even better in January than they did in last December. So that's what I mean by this may be one of the reasons why the stock is actually at $30, which is sitting below the lowest price target for this company, which is at $33. So it's either because this company is very undervalued, or because people just felt strongly about the results, the delivery results that were revealed at the beginning of this month about January. I still think that those results are great for this company. When you look back, compare January numbers to the year before, to January 2020, we're talking about easily a triple of what they did last year. It says right here that today that the company delivered 5,379 Li ones in January 2021. That represents a 355% year-over-year increase, and resulting in cumulative deliveries of 38,976 vehicles. So they more than tripled the numbers that they did last year, for that month. So that's impressive. XPEV did a lot better year over year in terms of growth percentages, but Li is still only selling one car. You gotta keep in mind, XPEV has they have the P7 and they have the G3 SUV, right? And then NIO actually has multiple cars. They're still not selling the new ET7, but they're selling their three SUVs, the EC6 and the ES6 and ES8. So these are obviously premium vehicles. They're more expensive, and I like XPEV because they offer a pretty much like a cheaper car, which is their their G3 SUV, which nobody really wants, and then they offer their nice looking sedan, which is the P7, which sells more than the G3. Now, by the way, that's just my own opinion on how I feel about those two cars. I prefer the P7 over the G3 for sure when it comes to Xpeng. Now the Li One is not an ugly car. It's a hybrid. It's not ugly at all. I actually like the design of it. But enough of what I think. Let's actually look at this article right here. It talks about China's electric cars. Tesla's missed target draws investors to homegrown EV makers, NIO, Xpeng, Li Auto in search of value. Now, I think these companies actually bring a lot of competition to Tesla. That's very good for the space overall. That's going to push forth a lot more innovation, and it's going to, and the customers is ultimately who's going to benefit the most from this. So it's not just the companies, by lining their pockets with money, but it's going to be the customer who's trying to look for a nice smart a smart EV car, whether it's an SUV or a sedan. They're going to be the ones that come out benefiting from this competition, basically a war between these companies, because they're slashing prices down to compete with each other. We saw what happened with Tesla. They slashed down the price of their SUV, one of the SUVs that they have, the Model Y, and that actually didn't affect NIO at all, because NIO actually had one of their best months, and that was last month. That was January. So I'm very hopeful to see what kind of numbers are going to come out for this month. We'll find out at the beginning of March. But Li and also Xpeng, they're phenomenal. I think that they're in that market for a reason. They're there to bring more competition, and for Tesla to start bringing down their prices, that's going to ultimately force Tesla to be more competitive with pricing and stuff. NIO is actually going over with the premium EV market, and now they're hopefully they're going to release a car that's more cheaper and affordable. Hopefully the EE7, my bad, not the ET7, but the EE7, like the mass-produced car, because the ET7 is obviously very expensive. It's a very expensive luxury sedan, but the EE7 should be a lot more affordable. Hopefully, that's going to be the one that they're planning to actually put out and push forward, just like how Tesla promotes the Model 3. They make a lot more money from the Model 3 because it sells more than the other cars, because it's more attainable. Now look, the bank. So this is how banks feel about Li Auto. So I know I went on a tangent and I pretty much had a little rant right there, but Bear with me, guys. This one right here, the bank also expects Li Auto to turn a maiden profit in 2021. A profit of 980 million yuan is forecast compared to an estimated loss of 541 million yuan in 2020, while revenue is expected to jump 92% year on year to 17.96 billion yuan. Basically, banks, institutions are predicting, they're expecting Li Auto to turn a profit by sometime by the end of 2021, which is very early, because if you compare that to when analysts and when institutions believe or expect NEO and XPEV to turn a profit, they're looking at years like 2023 to 2024. At the latest possible would be like 2024. At the soonest would be 2023 for like NEO of when they can actually turn a profit. So that's actually, I don't know if that's going to be good or bad for Li Auto, but them right now, they don't. It doesn't seem like they even need money, because they actually. I'm gonna try to find it here, but basically, I read that they actually have a lot of money on, like, cash on hand. They have somewhere around 19 billion yuan, which is the equivalent of close to $3 billion US dollars cash on hand. So that's gonna prove to be like game changing for Li Auto, and like they can use that money to fuel their research. That could be great. But under Beijing's Made in China 2025, this is the catalyst that I want to refer to before I move on. The industrial master plan, 20% of all new cars hitting the streets by 2025 will be new energy vehicles. So that will translate into more than 4 million such new cars on the road by then. Now, you got to keep in mind that the car that they're selling, the Li 1, is actually a hybrid vehicle. So it's not really fully electric, and it's not like a combustion vehicle either. So it's just in between. It's a cross between those two. And who knows if that's going to benefit that particular car. But I know eventually Li Auto will probably start selling these cars to comply with regulations and policies over there, because they're going to be very strict here soon in the coming years. But they're going to probably sell a car that's fully electric as well, to offer maybe a sedan to compete with like NEO or also XPEV's P7. Who knows? But the new energy vehicle sales across the mainland rose 12% in 2020 to 1.17 million units, buoyed by a strong rebound in the second half, heightening expectations of a big increase in deliveries this year. The China Association of Automobile Manufacturers, CAM for short, has projected year-on-year sales growth for 40% in 2021. So the analysts are basically predicting that this EV market is going to keep booming in the coming years, obviously due to regulations, policies, and because of subsidies are going to benefit these basically anyone buying these cars, and also the EV companies themselves. But that's going to push forward this sort of like transition between combustion vehicles and relying on those to preferring those EV cars instead, because they save the environment. They're going to be more compliant for their green agenda. And Morgan Stanley expects the shares to climb further, so they're actually pretty bullish on XPeng. I've already talked about this recently on my last XPeng video. Check that out if you haven't. But they have a price target which is very bullish at $70. Now NEO has the potential to climb another 40%, so they're bullish on NEO as well, with the price target of $80, which is just $10 above XPeng, while Li Auto could rise another 52%. So in percentages, there could be more room for Li Auto to actually grow in price. It could actually, according to Morgan Stanley, it could go up another 52% to $49. So that's what the bank said. Let me know what you guys think though. Li Auto, now this is what I was talking about. Sorry I didn't have the source earlier when I referred to this, but apparently Li Auto pretty much finished the year 2020 with somewhere around, this was reported as of quarter 3 ending September 30th 2020, that Li Auto had 2.78 billion US dollars cash on hand. And look at this, check this out, this is pretty interesting here. I want to zoom in so you guys can see this more clearly. But Li Auto cash on hand for 2019 was a little bit over $500 million US dollars. I don't know the exact numbers of what that translates into for RMB or yuan. To go from basically slightly over $500 million to almost $3 billion US dollars in cash on hand is impressive in just 1 year. So imagine what they will do this year, 2021, or where they could end this year with maybe like 5 billion, 4 billion cash on hand if they don't spend it on research. Like I said, they could use that money. That's a lot of money they can use to fuel their their research and all that, and to bring in lidar technologies and all that to compete with NIO and XPEV, because they're the ones, XPEV has their XPilot 3.0 and NIO has their, I think it's the like NIO Atom or something, but they have some lidar technologies. They're working with other tech companies to bring that into NIO cars for the ET7 Beyond and stuff. So they have to be competitive, and that's one way they can do that. Before I end this video though, because I'm talking a lot, but basically, if you're new to investing for whatever reason, check out the link in the description. But it's the Webull link, and you will get 2 free stocks for signing up. Check it out, click on it, and deposit $100 if you want to get free money. Basically, like I always say, I'm not a financial advisor. This is just my own opinion, and it's for entertainment purposes only. So you guys do your own due diligence before investing. Definitely research any company or any asset that you're trying to get into. This company at $30, there's a lot of growth for it, especially when you have these price targets that are over $43, the average one being at $43, the high target of $60. So yeah, there's a lot of room for this to grow and to run, especially as we're getting closer to the Q4 2020 results for this company, also the other EV companies, which is really exciting, because that's usually when Lee and XPEV usually go up, is after a good earnings report. Hope you all enjoyed this video. Leave a like and comment if you did. Subscribe to my channel and hit the bell for the future uploads so you guys don't miss out on those, and talk to y'all later.